Welcome to today's episode of Dollars and Cents. I'm your host Azim Merchant, and today we'll be talking about the domestic and regional equity markets. We'll shed some light on the FX market and give you an update on the latest COVID situation in the country. After that, we'll switch gears and talk about the international markets, particularly US Treasuries, gold markets, and oil markets. So let's jump in. The benchmark index managed to catch a breather in the first trading session of the week, closing at 33,738 points, marking an uptick of 0.9% day over day, marking a year-to-date decline of 17.6%. Foreigners continued to remain at bay as the foreign portfolio recorded net outflows worth USD 2.4 million versus outflows of USD 0.1 million reported yesterday, taking two-day outflows to USD 2.5 million. On a similar note, on a year-to-date basis, the foreign portfolio recorded net outflows worth USD 277.3 million versus net inflows worth USD 39.8 million reported in the corresponding period of the previous year. Investor sentiment largely remained boosted as a result of increase in international oil prices owing to tighter supplies. As international oil prices witnessed an increase owing to tighter supplies, the oil and gas exploration and production sector closed in the green as well as OGDC, POL, and PPL marked day-over-day gains of 2.1, 2.0, and 0.1%. With respect to the fertilizer sectors, Engro and Fuji Fertilizer marked day-over-day gains of 2.9% and 2.7% respectively. The banking sector also contributed positively as UBL and HBL closed up by 1.5 and 0.03% respectively. Looking ahead, volatility is expected to persist. Would recommend you sell on strength or buy on dips. And please stay away from speculative stocks. Having a look at what happened in the regional markets, the Philippine Stock Exchange Index closed in the green as it rose by 0.5% day over day. Kuala Lumpur Composite Index also closed up by 0.3% day over day. The Taiwan Stock Exchange marked an improvement of 0.2% day over day, while the Korean and Shanghai Stock Exchange declined by 0.7 and 0.1% respectively. Bombay Stock Exchange closed up 0.6% day over day, followed by Indonesian Jakarta Exchange, which marked a day-over-day decline of 0.5%. With regards to the latest COVID-19 situation in the country, the number of confirmed cases in Pakistan closed a little over 181,000, while cases reported in the previous 24 hours came in a little over 4,400 from the 6,600 that were reported in the previous day. Deaths reported in the previous 24 hours closed at 89 versus 153 reported previously. Recoveries closed up as well as recoveries in the previous 24 hours came in a little under 3,600. There was a wise decision to lock down areas that fell in the umbrella of rising coronavirus hotspot. A jump in cases is still expected owing to the upcoming Eid festivities. Moving on to the FX market, the rupee closed at 166.59 against the dollar versus 166.64 reported on Friday, marking a minor day-over-day appreciation of 3 basis points, a month-to-date depreciation of 2.1%, and a year-to-date depreciation of 7.6%. The panic selling in T-bills, equities, and bond market coupled with debt payments have not been kind to the rupee. Moving on to the US Treasury yield curves, despite the optimism and improvement in the equities markets as witnessed, the bond markets are still screaming as if it's the end of the world, as you can see that the rates for a shorter tenor paper is 0.17, while that of a longer tenor one is pretty much the same at 0.22. So it could be said that the recovery hasn't yet been priced into these rates, thus representing a tremendous opportunity to buy, because many investors expect there to be a deflation for a long time and they are not expecting the Fed to actually be able to stimulate growth and the economy to restart in a positive way. Gold continued its upward trajectory from the previous week as spot gold closed at USD 1754.7 per ounce, up by 0.6% day over day, as investors sought the safe haven metal after fears of rising coronavirus cases globally. Additionally, macro uncertainty, lower interest rates, and accommodating central banks should remain long-term supports for the gold. Moving on to the oil market, oil nudged higher on Monday on tighter supplies from major producers as WTI crude closed up at USD 40.0 per barrel, an uptick of 0.5% day over day, while Brent crude closed up at USD 42.3 per barrel, an uptick of 0.2% day over day. Oil prices have shown signs of recovery as social mobility restrictions have been lifted. However, any signs of rise in global coronavirus cases may very well turn the tide. If you found the information useful, be sure to share it, subscribe, and hit the bell icon to stay updated with latest developments on the economy, both foreign and domestic. Thank you for your time.